Hello there. A very warm welcome to Stock Wizards Trading Academy. My name is Jay, and we are going to cover about financial market basics and overview in this video. So first, let's talk about what are financial markets. Financial market, we can define financial market as a marketplace where trade of assets happen between buyers and sellers. So these assets can be futures, stocks, options, bonds, etc. So as per definition, financial market is any marketplace where buyers and sellers participate in trade of assets or securities. As discussed before, these securities can be equities, derivatives, bonds, currencies, etc. Examples of these financial markets are stock exchange and commodity exchange. And there is no necessary that these exchanges have their physical locations. It can be completely electronic form also. And example of such one electronic form exchange is your NASDAQ. It is NASDAQ. I have listed few exchanges that are famous. As you might be already knowing about these exchanges, it is BSE, NSE, and NYSE. BSE stands for Bombay Stock Exchange, NSE stands for National Stock Exchange, and NYSE stands for New York Stock Exchange. As we discussed now, completely run on electronic platform is your exchange NASDAQ, and NASDAQ stands for National Association of Securities Dealers Automated Quotations. Each and every country has their own financial market, and it has its unique name associated with these markets. So it becomes a little bit easier for us to understand which market is of which country. Now let's talk about a term called as transaction. Transaction can be termed as an happening, or transaction can be termed as a complete buying and selling cycle that happens between two peoples or two traders or two investors. Okay, whenever there is an exchange of assets, a transaction is created, and these transactions can be between any tradable instruments or securities like futures, bonds, options, stocks. Now let's look at various types of financial market and categories, and we have listed 9 categories in financial market. First one is capital market, and second one is money market. Third one is your derivative market. Fourth one, forex market. Fifth one, spot market or cash market. As the name suggests, the settlement happens in the spot market immediately with whatever price it is available. The security is trading at whatever price, it will be instantly cash settled. That is why this is called as spot or cash market. Then sixth, we have interbank market. Interbank market, you might be a little bit new to it, and this market actually trading happens between banks or big institutions, and this does not include retail traders or investors. Seventh is your equity market. Eighth is your credit market, and ninth is your commodity market. Commodity market, now it's a global market, and it includes trading of gold, silver, metals, and crude oil, etc. Now first, let's start with what are capital markets, by the way. In a capital market, buying and selling of equity and debt instruments occur. What happens is, whoever is issuing these instruments, they can raise funds for a longer period of time. Okay, and capital market also, we have divided them into 2 categories, that are primary market and secondary market. As the name suggests, primary market is a market where initially the companies which wants to be listed or which wants to raise funds for their business expansion or any other business growth, they can raise funds from the third party, that is your public. So what happens is, companies gets listed through IPO, which we call as initial public offerings. Okay, and the transaction happens between issuers and the investors, those who want to buy the shares of these companies, can purchase these securities from the primary market. Now let's think that there are a bunch of investors who have invested their hard-earned money in the markets, primary markets, in some companies, some sort of companies. What if they want to liquidate their entire investment? Liquidate means if they want to convert their stocks or shares into funds, how do they liquidate that? How does that happen? Who will buy from them? For this purpose, the secondary market was introduced. Okay. So secondary markets is a market where other traders and investors are allowed to trade in existing and new securities. Okay. So liquidating process entirely becomes a ease with these secondary markets, and this is the reason secondary market was brought after primary market. Now let's see type of capital markets. First one is stock market. Many of you might be aware of it. Marketplace where you can buy and sell shares of publicly listed companies or publicly traded companies is a place called as stock market. Then we have your bond market. Those who are not aware of bond market can get an idea about bond market here. First of all, there are a few other names for bond market. That is debt, credit, or fixed income market. Fixed interest rate is source of income in these bonds. Whenever you issue a bond or whenever you purchase a bond in the market, a certain amount of fixed interest rate is being already decided on that bond for, say, let's say a returns of 6 to 7% annually. That is the income you people get from the bond market. Okay. So now when compared to stock market, these bond markets are a little safer choice. Now the third one is also very less known to other traders. That is called as over-the-counter, OTC markets. In OTC markets, a less expensive companies trade, which are not listed on the major exchanges. These companies will be listed in these OTCs, and the regulations and rules are minimum as compared to the primary and secondary markets. In India, 1990 was the establishment date for OTCEI, which stands for Over-the-Counter Exchange of India. Now the second category is called as money market. You can trade in highly liquid securities which have short-term maturities. Short-term maturities, here we are saying that it will mature within 1 year of period. This can be any banker's acceptance, or certain bills, or some commercial papers. Okay. Now the third one is derivative market. Derivative market involves trading of any product that is derived from the underlying assets. For example, if stock is an underlying asset, the derived product from stock is your future. We call it as stock future and stock options. These are a type of derivative market instruments. Now there are various market instruments. Few famous derivative market instruments are futures, options, forward contracts, swaps, and CFDs, contracts for difference. We will get in detail with all this in our later chapters. First, let's continue with more types of financial markets that are available to us. Now this one, fourth one, is called as the forex market. As the name says, this forex stands for foreign exchange. What happens is people trade currencies of various countries. For suppose people will trade with US dollar against euro, or JPY against euro, or euro versus INR. Cross-country currencies are traded in these exchanges, and this is by far the largest traded market in the world. Now the fifth one, this is spot market or cash market. As the name says, the transaction between buyers and sellers happens instantly, and the settlement occurs at the current market price. Major exchanges like Nasdaq, New York Stock Exchange, National Stock Exchange, all comes under cash market. Now the sixth one, it's interbank market. Trading of currencies between banks and large investors happens, and this does not include your retail investors. Now the seventh one is called as the equity market. This, all of you might be aware of this one. And in equity market, you can buy shares of companies that are trading in secondary markets. Okay, or you can say OTC is a type of equity market. Fine. It is the main purpose of this equity market is to raise funds from the traders and investors, which companies can use for their business expansion or any other business growth. And we also call this as stock market. Now the eighth one, this is called as the credit market. It's a marketplace for debt securities and commercial papers, which government and companies or some other municipalities or some other governmental bodies can issue these papers. And you as an investor can buy these short-term commercial papers or debt securities for a fixed interest rate. Now the last one is the commodity market. As this commodity market, the name says, the trading or exchange of assets is mainly between commodities like gold, silver, or metal or crude oil. Now we have classified these commodities into two categories. One is hard commodity and the second one is soft commodity. Now whatever commodities that have to be mined or extracted comes under hard commodities like gold, oil. All these commodities have to be mined or extracted. And soft commodities, this includes agriculture product or livestock products like wheat, corn, sugarcane, etc. And these soft commodities does not require mining. So now we have seen complete 9 types of categories that are available in financial markets. So look for our next chapter. We will be discussing all these in depth, and a detailed study of all these categories will be carried on from our next video. So once again, I would like to thank all of you to see this video and keep watching at our next video, and we will be bringing up with more new updates and new education in financial markets. Thank you. Thanks a lot for watching.